Good morning, traders. It is Friday, October 3rd, 2014, 8:02 a.m. Chicago time. Happy Friday. Derivatives trading involves substantial risk of loss that is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Rundown of the overnight news. Financial Times says the U.S. inflation expectations moving towards lowest levels since December 2008. This poses a challenge to the Fed. Health officials in Utah investigating a potential Ebola case. The Eurozone August retail sales beat month-on-month 1.2% versus 0.1% consensus. UK September PMI services misses 58.7 versus 59.0. And Eurozone PMI came in weaker than expected, pushing Euro towards 126. It's currently below that. Public holiday in Germany today. Only fixed income futures are open. Equities and equity futures are closed. The U.S. just announced a half hour ago non-farm payrolls came in at 248,000 versus 215,000. The prior reading was 142,000, revised up to 180,000. That's important. Unemployment rate came in at 5.9% versus 6.1%. At the same time, U.S. trade balance came in slightly better at negative 40.1 versus negative 40.8. Again, it's important to keep an eye on the U.S. dollar and what it's doing. The U.S. dollar is pushing against, is strengthening against the euro, and also the British pound. It's getting close to 1.6, which hasn't been touched since November of last year. Another thing to keep an eye out for today, I'm opening up the Ask a Question webinar sessions, which are for Stage 5 traders only. I'm opening that up to anyone who wants to come in and ask whatever questions, just listen in. That's at noon Central, 1 p.m. Eastern, and the link for that is on my Twitter feed. I'll also post it in the comments section under this video once it's done. Looking ahead today, at 8:45 Central, just 15 minutes after the open, we have U.S. Services PMI expecting 58.5. At 9 Central, half hour after the open, the ISM non-manufacturing composite is expected at 58.5 as well. That's pretty much it for the day. There was definitely a lot of volatility overnight, a lot of movement overnight. The market created a what looks like a short covering profile. Let's take a switch over here and have a look at the charts. It's all in the charts. So yesterday, the primary trade plan for yesterday, as discussed, was a rotation up, was expected on the open towards 40, 75, 41 even. The market opened right on the edge of value, put in a two-way rotation here. My opening swing has moved. Putting the opening swing at 37.25 to 38.75, pulls back to the open and then breaks higher and completes the first part of the plan that was discussed. Again, we expected a responsive test of the of VPOC and the gap close, and then we expected a lower and a break of 33.75. And the reason for the break of 33.75 is because the market has consistently shifted the point of control lower, so the skew was to the downside this week. But also overnight, the market came all the way down to 33.75 and pulled up a little bit on Wednesday night to Thursday morning. And and the expectation was for a breach of that, and I provided targets below 30, 50, and so on. We'll go over that in a second. Market ended up breaking to 41.25, putting in a weak high. Didn't like that at all. Rotated back down to the open the second time, and then we had this big rotation of 42.50. So that made the short plan a little bit unnerving, but in the end, it still played out. Just had to kind of be patient through it. And then it finally broke through. A nice pullback to the mid here at 39 once the IB low is broken. Beautiful pullback to the mid. And then again, a continuation, 7.25 points. A nice little impulsive move here. So expected an extension move down to our target here, 30.25, 30.50. So if you note here, right here, 30.25 is this CLVN that I pointed out yesterday. Lines keep moving. And so it took care of that. A small rotation back up, 2 points, and then the market just could not find buyers yet and kept dropping. Big drop. This is definitely a lot more than I expected. The range analysis that I did was from the 42.50. The expectation was for a low of around 25 if this was going to be a normal range day. On the downside, it hit the 24.75 for a 1.5 point rotation, but it just continued lower. What's even more surprising is once it got down into this 18.25, which was a gap zone from way back, or an LVN zone from way back, and it just found buyers here at 18.25. We were pushing well into the balance zone that we left behind from this 8.12. If you recall, on the 31st of July, we had a big drop, and then we balanced for a while, and then we finally broke out of that on the 13th of August. We ended up pushing right through down into it, and finding buyers at 18 in this area here. So this is what I call a template day. As the market comes down and it trades down into these old days, old auctions, that day's auction becomes what's called a template day. So I go back to that day and I see how the levels were formed, how the value is created and so forth, and then base decisions on areas the market might get a reaction, and I emphasize might, based on how it responded that day. Does it form a weak low? For example, when it got down to 29.50 initially yesterday, it basically created a weak low with the 15th of August, so the expectation was for lower. So I'm just basically looking back to see what was left behind. We had a gap here, and so the expectation was for it, once it broke through the 26th, that it would float right down into this gap zone, and it kind of did. Small bounces, I said, at 25, but not much there. Hard to see on this 15-minute chart, easier to see on the Renko. But here it is, right here, 25. So it breaks through, comes down to 21.75. It one ticks the gap, and then it fills the gap down to 18.25, and then it finds buyers on the way back up. And it's once, to me, this looked like a well, for one thing, the range was very extended at that point, 42.50 to 18.25, giving us 17 points of range, or whatever that is. And so the range looked pretty extended at that point, but it could have easily continued lower. So the expectation was for it to pull back to the mid and find some resistance for another rotation down with a higher low. If we had put in a higher low after the mid test, then I would be off the shorts. What it did is it pushed to 28.50, which is well ahead of the mid, had a small rotation down, put in a higher low here, and it just walked right through the mid. and through the IB low. So this is a clear buying tail here. It just doesn't get cleaner than that really in the real world. It gets cleaner than that in textbooks, but look at these single prints down here. The market just has pushed to and found an excess low and found buyers to take this back up. And what we ended up with is actually a return all the way through the range to new highs at the 45 quarter. And that's I think that threw a lot of people off. What we have is a pretty clear inverted head and shoulders formation here with an upwards target of 72. Okay, so this head and shoulders here, left shoulder, neckline, head, neckline, right shoulder formed overnight. The pivot points 45 and a quarter, 45.50. If you project the 45 and a quarter from 18 quarter, you get 72, which puts us up in this profile right here on the profile of the 30th of September. So keep an eye on that. It looks like it's found its strength for now. One thing I want to note, despite the fact that this is a 15-minute, 24-hour session, despite the fact that it found its buyer here, it kind of caught the elevator down, which is fairly common. So it caught the elevator down on the drop, and then it just tiptoed its way back up. But look at what happened as it held this upper area and moved the point of control from down here at 30 all the way back up to 38, 39. The delta was a seller all the way down to the bottom, all the way down to the low, even though price was up here. So there was a lot more selling on the bid as the market was moving up than buying on the offer. So we just see that a lot. There just seems to be an awful lot more hedging going on with the futures than I'm used to seeing. So that's what the story was yesterday. We had despite the sell-off and the strength of the sell-off, we had actually a short covering profile by the end of the day. And then we continued higher overnight. So overnight opened right where it closed, and just walked itself up. Some pretty good pushes here. The Asian, there's a release in China, and it just walked itself up on non-farm payroll day until the number was released. On the release, it retested this 45.50 high and pushed to 53.75. The next area up I have is the bottom of the micro composite. Let's look at that for a second. Uh-oh, what did I do? Let's look at that for a second. The bottom of the composite from the August 19th gap is 55.50 with a low volume node. If I took this lower balance and this upper balance and combine them, I end up with this area here on the micro composite, a low volume node, and that's the key area above right now. Do we or do we not get back into the micro composite from the prior month? We occupied this for about a month and a half from the 19th of August until September 30th. We tend to make our move on the last day of the month or the first day of the next month lately, but it looks like it might walk itself back up. There's a fair amount of resistance up here. It's starting, we have an MCLVN here, but starting at about 59.60, there's a fair amount of resistance, and I expect that it's probably not going to push much higher before it rotates back down and then starts to retest some of yesterday's action to complete the auction down there. So the primary idea for this morning We have a close near 38. We have a point of control near 38. We have the market trading at 1951 currently. So I'm looking for an attempt. The probabilities for gap close today are very low. I believe 21% or so. And again, past performance not indicative of future results, but the probability with this big a gap for the gap to close, there's actually a chart on IRT that you can get that looks at 1400 days and gives you the probability of that close. Is around 21% today. But still, the expectation is for the auction to be responsive back down towards 1945.50 to base, and then I expect the overnight high to be taken out up to this 55 and a quarter. If it gets down to 45 and a quarter, 55 and a quarter is only 10 points up. So the extended target for today is likely to be this 1960 area, CHVN. I doubt that it'll get to 65 to close this naked point of control and gap, but anything can happen here. Again, 62.75, 62.50 has been instrumental recently. It's been a top, and so if you look at 62.75, you'll see multiple reactions at that price, and a CLVN, a high volume node, and a whole bunch of stuff here. This is the high before the sell-off, 62.75. So the next, that's likely to be our extended target for the day if it continues to push higher, assuming sellers don't step in, seeing these prices to be advantageous. I'm sure there's going to be a two-way battle on the open. Don't forget that there's a there's a number at 15 minutes in, and there's a number at 9 o'clock. It is Friday. It is non-farm payroll Friday. There's a tendency for the bigger players to leave early on this day. So, and then Monday is likely to be choppy with a skew in the opposite direction. So however we end up today, Monday is likely to be choppy with a skew going the opposite way. We'll see. Anyway, I'll leave you with that. Again, don't forget, noon, I have an AAQ webinar. There's a capacity of about 1,000 viewers, and that could get filled up. It's gotten filled up in the past. And it's an open session for those who might have emailed me. I have a lot of emails that I haven't responded to. I have over 6,800 emails that I have not responded to over the last couple of years. So if you have a question, there's a good chance to kind of get in there. It's just hard to respond to emails, especially ones that are really long. I just cannot devote the time to it, unfortunately. I want to help, but it's not possible. So join this webinar today and ask your question. It can go over. It'll probably be an hour and a half or so, just to try to get through as many people as possible. Anyway, I'll catch you then, and good luck today. Take care.